Good afternoon, traders. 12:02 p.m., October 2nd, 2018. Any problem hearing me, make sure you let me know in the room. They were moving stuff around in here today. I'm going to do just a real quick review on oil, shut it down, turn it back on, and then we're going to do a quick midday. At latest, we'll be out of here 1 o'clock. The crew here is processing the final reports for me so we can get them out in the next 72 hours. And I know I've been promising, and we're on it. We're on top of it today. Okay, there's lots going on in the back end. You know, one quick thing is with the software development, it's really thick and mucky. It's hard to explain, but I'm not traditionally a software development guy, so I have these staff that, of course, I'm learning from, and it's quite the thing to forget the fact that we're financing it. It's quite the thing to learn and to go through the experience and stuff. There's a lot of detail there, and you end up, it's the best way to explain it is like being stuck in the mud with a 4x4, and it just never ends. Actually, I mean, so if you can imagine, we've got that happening all the time with the coding of these models. So until the markets inflect for us, and we knew this was coming, we know it's coming, we know what's happening. Anyway, so that's kind of that's a little sneak peek of what's happening, with us, with me and my small team. Okay, so real quick with oil, when this report came out, I was like, oh, here we go. We got a bunch of targets all in one cluster, and sure enough, so price is just clustering. Tonight's report at 4:30 and the EIA in the morning at 10:30 is going to determine what I do. It's been tough for me last, whatever it's been. It might be close to a month. I haven't kept track. It feels like an eternity in oil because I'm not used to losing in oil. But anyway, I'll forget the shoulda, woulda, couldas and just tell you that when it extended up here into the next channel, the first thing I said was it's divergent in this upper channel. So it is going to return to this channel eventually, but who knows when. So my trading plan, I'll make it as clear as I possibly can. My trading plan is, I've got two trading plans. I've got an intraday trading plan, or a tight time frame trading plan, and I've got a swing trading plan. My swing trading plan has to see a return to at least near the bottom of the channel. And the last hit I missed, and the one before that I missed. I'll just show it for anybody that hasn't seen it really quick to give you an idea. I was waiting for perfection. I think I was 12 cents off my entry. And anyway, by the way, yesterday that day trade, I went back into that video, and that was kind of a sweet day trade. I wish I had on what the hell was that? Was the market open, wasn't it? Yeah. Anyway, I went through the video earlier today, and it was pretty smooth. Where is that hit? So this is the extension, the divergent extension. So when it was running, I thought for sure it was going to stop here, and I should have just ran with it. You can always re-enter, right? I don't know why. I don't know why I have a problem with that. That's my personal struggle as a trader. Pardon me. Sorry, guys. Anyway, the one that I missed, and I mean, look at this, 2 quads, right? What a trade. But you'll never be the robot. You'll never get them all. Don't get hard on yourself because it takes longer to come out of it. And that's what I just did in oil the last 2, 3, 4 weeks. I can go and win for 5 months and then, have a couple losses, and then it takes me a while to put my head back together. I think, well, I know most of you guys and gals, we know each other quite well. That's our challenge. Anyway, right here is where I missed it. I wanted another 10 cents or whatever lower, and boom. Would have been a phenomenal trade. Just trust the model, right? But it was so messy up in here. I didn't like this. But I should have guessed, the range resistance was here, and this makes sense when you consider the range resistance. The gray horizontal, the big thick gray horizontal. So, it's easy to look back and go, yeah, that made so much sense. But so what's the plan? The plan is twofold. On intraday, so it's been squeezing, obviously, right? So intraday, if I'm in front of these monitors and I see it squeeze, I'm going to go with it, and I'll just set a stop on it, and I'm just going to go with it because anything's possible now. This could run. Anything's possible. I mean, I was trading it when it ran up to, what was it, 140 some dollars, and dumped and ran again and dumped. So with oil, you can't sit. You got to go with it. When it goes, you got to go. You just don't have a choice, but you have to do it properly, and you have to do it with stops, and you can't allow yourself to sit under pressure because that pressure can last another year and a half. Right? Oil's one of those things. So that's intraday. So I'm just going to go with the squeeze. When the squeeze comes, you'll see me alert, and I'll just be like, look, the bottom line is this is a squeeze, and I'm going to go with it. If I have to take a few paper cuts, then I have to take a few paper cuts. So obviously there's a cluster of targets here for Tuesday at 4:30 and Wednesday at 10:30. Now on the swing side, it's got to be a channel support. So and that's the plan, right? Do I think it's going to return to the parallel channel underneath? Sure, but it might take, nobody knows. It can take months. So if I get an entry in and around the basket here, I'll be long on a swing, expecting to be able to size in. Now, there is this chart. So, okay, so anybody that doesn't know this model, this is the support on the channel, this is the resistance on the channel. Here's what gives me caution. So if you know anything about our algorithmic modeling, our basic charting, what we would call generation 1 charts. So that's what this is here. Go to the epic report, and this is a big wedge, so it's just magnified. These are diagonal fib lines, and so I've broken it down. I've fractaled it down. But these boxes, whenever you see these boxes, they're really important. You notice how at the top of the box it's struggling? I mean, the wick's up there, but it's struggling. If this starts to dump, very realistically, I mean, it's opposite of the trend. Forgetting the trend for a second, probability is that it sees 74.23, which isn't a huge dump, October 22nd. The bears are actually, the bearish scenario is more probable. But when you weigh the trend into it, not so much. But that's its problem right now. It's testing that resistance. So it's either going to see that 74.23 on the 22nd, or it's going to see the mid quad here at 76.84, or it's going to see the top of the quad at 79.64, and there's even a test here, I guess, at 78.36. So there's really 4 different numbers I would focus on, and I would just follow your intraday. So as the reports come out tonight and tomorrow, whatever that trend is, I'm going for it. I'm just going to go toward these targets, whether it's up or it's down. The most bearish scenario is down here at 68.39. I don't see that happening, but Trump doesn't want the price of oil up. He can't. I mean, it'll send the economy into warp, bad warp. Okay, so that's the basics of it. I'll walk you through it as I'm doing it, and I'm gonna trade it heavy. I suspect it's going here. I suspect it's gonna be sitting, in between 78.30 and 79.60 on October 22nd. That's not very far away. That's a good trade. Once it gets up and builds a base, gets any kind of base over top of this box, it's, it'll end up there, no problem. Okay, so that's oil. I'm going to stop it real quick and I'll be right back.